Alright, this is going to be a review of December 6th Asia session. I know it is December 7th, but we're going to kick this off the next day because we had a good move that we had to wait and see what happened to fully understand. So we started this analysis off with our COT data. We have JPY, they're closing longs, not opening many shorts, but closing longs, so some profit taking on JPY. And then CAD, we have them increasing longs, decreasing shorts. So bullish CAD, rather flat to bearish JPY, which is what gave us the CAD JPY pair idea. Also looking at the price action, we see on the daily, it's coming into this key area, this key sponsor area of this huge move up. While people are longing, or institutions, smart money is longing CAD and closing their longs on the yen. And if you know anything about closing longs, that is basically a sell order of some form that should lead to some selling or some downward pressure in the yen. So with that, we think we could get some kind of move in here on the daily. If not, another higher high. Not really sure. Oil's looking a bit bad, so maybe not, but at least a bounce to maybe something up here. So on the 4-hour, to confirm this, we wanted to see it react. We had the 50% of that daily candle, sponsor candle, order block, whatever you want to call it. Price came up. We looked to see what happened at the 50% of these two candles put together, and then the 50% of this bottom sponsor candle of that breakup structure right in here. And we saw what happened in here. Jumping down to the 30-minute, we see it tap this candle and react and start to move away. So with this reaction would be something that we would know, okay, if it's reacting here, and in that previous day's New York, I tried to take an entry in here and target this level right in here. So with getting in that, right, and we're targeting here, we can assume that it would make it to at least here. And then once we got to here in late New York, getting ready for Asia, I looked at this and thought we might be able to short this here back down. But that's not what happened, because I looked at this and I didn't get the entry validity at this point of interest, and instead what I saw was it break higher and clear this candle and violate it. So that's when I knew, okay, let's look at that demand area. That demand must be valid. So let's look to enter somewhere in there. Right. So now let's jump down to the 1 minute. And what we saw was this was that 30-minute POI. We have a nice strong trend in, a nice slow weak trend back. Look at the size of these candles. Not many big wicks and good movement. The impulses are strong. On here, impulses are weak. It's very tight. Not very strong price action. Coming back into this point of interest. And what did we see? We saw it break up and break again. Could have entered off that. I personally wasn't convinced until I saw this move right here. Now, after seeing this move, I saw price tap this area again and shoot up. So I looked to enter. Well, I looked to enter on retracement to here. Could have entered it at the 50%, but we're not gonna say that much right now. It is what it is. So then I think I made a mistake with this trade, was where it was on my management. I saw it close above here and wick above here, and I didn't break it even. I just reduced the risk to something in here, and I also saw it move back aggressively. That's when I really should have put it at break even. I didn't. I just reduced the risk. Was a management mistake on my part, because these things do happen. It does come down and take liquidity sometimes, and I think this is why, was because we had this clean trend line forming, a very clean trend line, and the bodies respect it very well, and I think it needed to shake it out. It was too clean. It needed to come down, shake this out, and that's why we get this final aggressive move. So this is where I think the banks were getting in. They were saying, okay, well, we need to enter this nice long position, and we saw that with this big aggressive move up right here. So this, they saw all of this liquidity here, they sold it down, took everyone out, and bought in this buy right in here. Maybe they got in here, came down, got in again, and then it went exactly where I thought it would, targeting this high, because if this was the 30-minute trend, we would expect it to at least test. We would expect it to break through these highs, and with the higher time frame in mind, we're targeting at least here, if not up into this candle somewhere, which is exactly what happened. We knew it would test at least here if it can get above this point. So that's why I targeted it as my final, and everything worked out well. I just didn't see this liquidity grab, and I managed it not the best. So that was the only issues, and I think this is a kind of common thing because this did happen again in New York too. We saw this, break of structure and weak higher high, but it was this trend line which was taken, tapped the 50%, and then moved off, and you could have got an entry in here. I think this one was just a bit confusing, more confusing because it didn't really tap anything down here that was key. It just kind of took the liquidity and reversed, and sadly did not give many more entries to get in. Maybe you could have saw this break of structure and higher high and then tried to get in right there. Something like that would have been actually a better trade. So I guess you could have gotten in there, but with this imbalance down here, it would have been a bit risky. Maybe after, would have been a bit risky for me. But yeah, that is Asia session. Watch out for these manipulations. Sometimes you just can't help them, and they happen. But with that proper management, it would have been a break even instead of a small loss, and that's all we need. Is just manage it properly, and we would have had break even night. So with that, this was Asia session, December the 6th.